In this video, I'm going to talk about a penny stock with serious potential. Everyone this year is looking for the next big stocks, and while the S&P 500 has grabbed the headlines with a huge year gaining over 25%, as we know some penny stocks have the potential to far exceed these types of gains. So today, I have another exciting penny stock for you guys, a penny stock that is experiencing huge growth and that some analysts rate as having more than 100% upside Nasdaq FPAY. Before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video, so help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor, and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So in today's video, I'm going to be talking about FlexShopper Inc. a stock. This stock is trading on Nasdaq under the ticker symbol FPAY. This is the first time that I've talked about this stock on the channel. But there are a lot of exciting things going on with this company lately, and this is definitely a stock to have on your watch list right now. So first of all, what is FlexShopper Incorporated and what do they do? FlexShopper is a leading national financial technology company that offers innovative payment options to consumers. FlexShopper provides a variety of flexible funding options for underserved consumers through its direct-to-consumer online marketplace at FlexShopper.com and in partnership with merchants, both online and at brick-and-mortar locations. FlexShopper solutions are crafted to meet the needs of a wide range of consumer segments through lease-to-own and lending products, as it says here on their investor website. FlexShopper offers cutting-edge technology that enables traditional retailers to offer their services and products to a demographic they weren't previously able to target, the subprime consumer. The omnichannel payment solutions include a lease-to-own e-commerce marketplace, on-site e-commerce payment models, and mobile applications for in-store point of sale. With FlexShopper's best-in-class proprietary application process, when a customer applies for a payment solution, it does not impact their credit score, and the company has multiple payment options for all types of credit profiles, which provides value to both consumers and retail partners. So basically, this company is providing a service to customers who either need or prefer to spread the cost of purchases out over time instead of paying the full cost upfront. There are a few things that have caught my attention about this stock over the past few weeks. But first, let's take a look at the most recent investor presentation so we can assess the opportunity. FlexShopper operates an asset-light dual-channel business model. They provide consumers with immediate purchasing power to buy products through FlexShopper.com and additional corporate-owned microsites. On the B2B side, they provide retail merchants with greater consumer demand and higher sales conversions by providing a payment option on a retail partner's e-commerce site or brick-and-mortar location. It is this unique dual-channel model that allows the company to follow its customers, supporting cross-selling opportunities and repeat customer transactions. This has led the company to recently achieve record-breaking revenue growth and see FlexShopper get bullish buy ratings from Wall Street analysts, which I'll talk about in just a moment. Looking at the B2C channel, there are unlimited expansion opportunities to microsites. The model yields predictable and attractive cash-on-cash returns in the first year, with 50% repeat customers. On the business-to-business side, FlexShopper's payment solution is supported by the addition of 4 integrated partners, with significant growth in retail locations over the past 3 years. There's a high conversion rate, with merchants experiencing an increase of approximately 40% in financed orders, and the percentage of repeat customers stands at 36%. As I said a moment ago, FlexShopper recently reported record financial results. Their strategic fintech transformation produced record quarterly total revenue of $38.6 million, with earnings increasing to 5 cents per diluted share for the third quarter of 2024. Adjusted EBITDA increased 45% year-over-year to a quarterly record of $12.2 million. FlexShopper CEO Russ Heiser Jr. stated that 2024 is shaping up to be a transformative year for FlexShopper, as the strategies they are pursuing to profitably grow the business take hold. They are successfully adding new retail partners and, to date, have expanded their signed store count to over 7,800 retail locations, nearly a 250% increase since the beginning of the year. Now this is huge. These are the type of things that I love to see when I look at any growth stock for the first time. Rapid expansion, of course, but importantly, a road to profitability is key. This is highlighted when comparing FlexShopper's quarter-over-quarter increases. Total lease funding approvals increased 33%, from $57 million up to $77 million. Total revenues increased 22%, up to $38 million. Adjusted EBITDA increased by 40.9%, while operating income increased up to $9.6 million. It's a similar story for the 9-month period. Adjusted EBITDA increased 63%, up to $24.6 million, compared with $15.1 million, while operating income reached $17 million, compared with $8.1 million for the previous year. I believe these are very positive results. But what do analysts think of FlexShopper? This is where things get very interesting. FPAY stock currently has an average price target of $3.25, which is over 100% upside from the current price of around $1.63. According to two separate Wall Street analysts, Maxim Group boosted their rating to buy and set a $4 price target following the earnings report, which suggests they were impressed by the company's performance. Since then, FlexShopper has released a ton of positive press. They formed an exclusive lease-to-own partnership with United Wheels and its portfolio of bicycle brands, including global and household names such as Huffy, Niner Bikes, Batch Bicycles, Fast Bikes, and Buzz e-bikes. United Wheels is a global leader in the outdoor industry, shipping over 5 million bicycles annually to more than 50 countries, and generating approximately $1 billion in revenue each year. This is a huge deal. They also announced a partnership with Tire Agent to expand tire shopping options for near-prime credit customers. Tire Agent currently originates over $100 million in lease-to-own transactions annually, and is a 2-time honoree of the Inc. 5,000 list of fastest-growing companies. This partnership also includes the launch of FlexShopper.tireagent.com. Most recently, FlexShopper expanded lease-to-own solutions at Jiffy Lube and Minuteman Care Centers, beginning with 100 locations and plans to add 75 to 100 additional stores within the next 60 days. What really grabbed my attention was the company's announcement just before Christmas of record holiday season results. Lease gross profit increased 51% for the first 2 months of the fourth quarter, while lease marketing expenses declined over 40% for the same period. New loan originations increased over 30% compared to the same period last year. This is the result of the company's impressive growth strategy taking effect. The 4 key growth strategies include total addressable market expansion through integrated partners and standalone solutions, improved conversion rates, where management estimates that every 1 percentage point increase in conversion adds about $35 million in adjusted EBITDA, and continued growth of the retail footprint. At the moment, FPAY stock has a total market cap of about $35 million. So think about the impact these conversion improvements could have. Retail locations have increased from just over 1,100 in 2022 to more than 5,000 in 2024. While retail revenue growth has surged, in 2024, revenue was up 76% from Q1 to Q2 alone. Q3 was a record-breaking quarter, and the holiday period once again delivered record results. One last important point is the investment highlights. FlexShopper has a profitable financial model supported by issued patents, a strong value proposition, a high repeat customer base, and a favorable risk profile with solid expected cash-on-cash returns. Most importantly, there is strong insider alignment, with insiders owning approximately 37% of outstanding shares. Insider ownership is something I love to see, especially when insiders are increasing their positions, and recent data shows insiders buying shares within the past week. So guys, let me know your thoughts on FlexShopper in the comments below. Everything seems to be pointing toward a deep value opportunity, with the company just beginning to turn profitable and execute on its growth strategy. Remember, I'm not a financial advisor, and this is not financial advice. So make sure you do your own due diligence. The stock is already up more than 50% in the past 2 months. But this looks like it could be something special in the making and not one you want to miss. To learn more about FlexShopper, check out the link in the description below. Thanks for watching, and I'll catch you in the next one.